Financial considerations like the stock market fall and the rising cost of debt are causing problems for the entire economy. So, what steps should consumers and investors take? Jim Rickards, an American lawyer, economist, investment banker, media analyst, and author, will outline the safety precautions you can take. In this video, Jim offers preparation advice, historical context, and an explanation of how he sees the coming crisis evolving. Why should you take Jim Rickards' prophecies seriously? Rickards is familiar with corporate bailouts. In 1998, while serving as general counsel for long-term capital management, he was successful in negotiating a $3.6 billion rescue. When Mr. Wonderful or Kevin O'Leary made comments on the FTX catastrophe, he quickly saw through them. He stated as much in this tweet from November 15, 2022. Rickards has warned about the dangers of cryptocurrencies and forecast disasters like to the FTX for years. In 2017, Rickards issued a cryptocurrency warning. He warned that the government and the world's elites will eventually ruin and use the sector for domination, and referred to it as crypto hysteria.
Capitalists control the means of production, so they extract excess value from labor. Labor doesn't get their fair share. All of that's nonsense in terms of how we value things. But the point is, subjective value is based on confidence. It's a liquidity preference. If you're willing to transfer your hard-earned dollars to get a Bitcoin, you're expressing a liquidity preference for a different form of money. But confidence is fragile. Again, if you're throwing your wealth into Bitcoin and that confidence is lost, what's left?
Rickards explains how the world's markets are artificially inflating in his Wall Street Journal best-selling book Aftermath, and how readers can prudently safeguard their capital. He issued warnings regarding a number of asset classes, including cryptocurrency. Rickards said that Bitcoin is founded on fraud and will eventually collapse in a daily reckoning piece dated March 1, 2021. He described the 2018 Bitcoin crash as a sign of a more spectacular crash. Cryptocurrency investors will eventually fail financially. The collapse of FTX, the fifth largest cryptocurrency exchange in the world, brought down the whole industry. Also, bloggers claim that at least $1 billion in client funds from FTX have disappeared. As Rickards had warned about Bitcoin, the entire FTX business was a gigantic Ponzi fraud built on deception. Now it is clear that is the Bernie Madoff or Enron fraud for today's world. The magnitude and breadth of FTX, though, may potentially surpass both.
Personally, I'm very skeptical of Bitcoin. I know what the price action is. It's going up 10% a day at this point. Look, Bitcoin could go to 20,000. It could go to 30,000. It's on its way to zero, somewhere between 0 and 200. It's a utility token for criminals, terrorists, money launderers, tax evaders. They'll always find some use for it, so it may not go all the way to zero.
One of Jim Rickards' main talking points has always been the value of gold and its possible uses as a weapon. He talked about it in his address delivered in March 2009 at Johns Hopkins University. In his best-selling books and innumerable blog posts, he forewarned readers about it. He focuses on the risks of clandestine Chinese gold acquisitions and currency manipulation in his 2011 debut book, Economic Warfare. In his 2016 USA Today and Wall Street Journal business bestseller, New Case for Gold, Rickards underlined the reasons why gold is still necessary. Gold continues to serve as a store of wealth, a standard for currencies, and a safeguard against market and political upheaval. In a book he wrote the same year, he claimed the global elites were hoarding assets in preparation for an oncoming financial catastrophe. According to Rickards' tweet on November 1, 2022, the current situation is what he predicted in his lecture and books. He admonished in the tweet that central banks are buying gold at virtually unknown rates and that perhaps they are aware of data that others are not. While the global energy situation gets worse, Jim Rickards is conducting a victory lap and saying, "I told you so." In a tweet from October 19, 2022, he condemns the Biden administration's foreign policies and apparent dishonesty. Yet Rickards has previously talked about this, particularly in relation to unreliable partners like Saudi Arabia. Rickards predicted the state of the global economy in his 2014 New York Times bestseller, The Death of Money. He made reference to the political impasse, the conflict with China and Russia, and other issues. He made sure to express concern about overdependence on Middle Eastern oil producers. He prophesied that it will eventually lead to financial conflict and economic collapse.
The collapse of sterling and the collapse of budget is part of a global monetary contraction, pending global financial crisis having to do with the dollar shortage. You look around markets around the world, UK, but sure, US, elsewhere in Europe, So what's going on? Stocks are down, bonds are down, gold is down, oil is down. The euro is down relative to the dollar, sterling's down, etc. You look around.
In 2023, we are still here, depleting our strategic oil reserves while making scant progress towards reaching energy independence. Currently, there is a lot of pressure on the Fed. Despite the fact that inflation is starting to go down, it is still too high, with the March CPI coming out on Wednesday, April 12 at 6%. Similarly, the employment market continues to be hotter than the Fed would like, according to the most current official figures. Given these facts, the Fed is unable to defend a change in strategy, but the sudden and sharp rise in interest rates that the Fed created is also likely to have a negative impact, as evidenced by the recent spike in bank failures. A serious enough systemic collapse might force the Fed to change its approach. So how is the Fed handling the dangerous situation it is in? The Fed can take action to stop inflation caused by demand from raising interest rates on everything from mortgages to credit cards, which could harm demand. To block supply, the supply chain, or cost-push inflation, they are powerless, because it is impossible to make gold with Russian titanium. Yet supply systems are failing in numerous other ways. Bond prices increase as a result, but the various forms of inflation will drive up prices and exert pressure on them. The reverse of inflation is demand-pull inflation. Customers now start acting differently. People begin to reason that since costs are going up and becoming out of control, they should go out and purchase the item they need. If you plan to buy something, such as a dishwasher, car, or refrigerator, you should do so immediately because the price will rise if you wait 3 months. That will be much higher in 3 months. Hence, even if costs increase, there will still be enough to put gas in your car and food on the table. There just will not be much extra money. It is correct to assert that they are unable to stop it, and that it is likely to stay on its current course. If the price of those two goods increased, which it did, you would have less money available for other costs. You will say, well, I am going to postpone the trip, forget the concert, skip the restaurant, do not buy new furniture, and I will start living frugally to pay for food and gas. The Federal Reserve is prepared to raise interest rates until it has effectively combated inflation, even if doing so will depress job growth and cause the economy to enter a recession. Even the most optimistic Wall Street investors now understand this message.
But this dollar shortage, which people have difficulty imagining, say, hey, the Fed printed $7 trillion. How could there be a dollar shortage? The answer is the printed money. And this is true for the Bank of England also. This is why the gilt purchases have no stimulative effect at all, because you buy the gilts from the dealers and then they take the money and give it back to the bank in the form of excess reserves. So it doesn't go into the economy. It doesn't actually do anything.
Following are two things you should focus more for upcoming crash. One must allocate up to 10% of their wealth to gold. The most durable asset known to man is gold. Gold, according to Jan James data, is an asset that performs surprisingly well when things are horrible. He even refers to it as the most important thing going forward and believes the price per ounce may increase to $14,000. He asserts that one of the leading hedge fund managers, Ray Dalio, who is raising the alarm about a downturn, has invested more than $400 million in the market. Other billionaires who have bought include Paul Singer, Paul Tudor, James Bond, King Geoffrey, Gunmach, and Lord Jacob Rothschild. Gold has also been advised by financial experts like Robert Kiyosaki and Dan Ferris. Now is the moment to buy gold and other precious metals. Number 2. Have money. Cash denotes availability. He suggests making sure you have enough cash on hand to cover your bills for at least 3 to 6 months. He asserts that when the market collapses, the majority of people will be entirely wiped out, and preparing a small amount of cash will shield you from the approaching storm. The possibility of losing their jobs or facing unmanageable bills is one of the most important threats to people during a recession. With a healthy cash reserve behind you, it is simpler to face uncertainty with more assurance because you obviously know you are well prepared financially. James Rickards presents an alternative plan for people to survive a recession if prosper is not an option, in addition to cash and gold. He claims to have a special type of crash protection play that few investors are aware of. These are anti-meme stock companies, and given that you watch my channel, here are the top 7 anti-meme stock firms to buy. 1. Goldman Sachs. 2. Lennox Worldwide. 3. Raytheon Technologies. 4. PepsiCo. 5. AutoZone. 6. AMC Networks. 7. Freeport McMoran. These companies have a high return on capital invested, which enables them to expand and thrive despite a crisis. Joseph Kennedy, John F. Kennedy's father, employed a similar plan to establish the Kennedy family fortune during the 1929 financial crisis. A roughly identical method was employed by billionaire Mark Cuban during the dot-com collapse to protect his investments and make more than $1.4 billion. Charles Darrow, the man behind the Monopoly board game, made millions even during this crisis. These billionaires put the advice I am giving them to use. With almost 40 years of experience, Rickards is an expert on both the complexity of governments and the global elites, as well as in understanding how the global financial system functions. He knows how the world works from personal experience. He therefore has that viewpoint. He has observed it from the perspectives of an economist and a government insider. Sometimes he saw ugly things, and the truth might hurt. Several of the things he predicted decades ago have happened. Everyone can easily see the proof on his Twitter since it is unmistakable.